Welcome to the June 28th, 2021 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your fast-paced global tour of the financial markets. And I'm also president McGowan Group Asset Management, serving as the family office for families here in North Texas and around the country. We bring you the wisdom from real portfolio managers here at McGowan Group Asset Management. Today's chart beginning is Dow Jones Industrial Average. So we'll begin the fast-paced tour. Dow hit 35,091 shortly after the stimulus checks arrived in April, and currently 34,400 at the end of the week. It appears to be range bound, and that's probably a good forecast going forward as we start to see growth rates compared to last year slowing down. You also get, let's say, some disruptions from Washington along the way. What is this? A very colorful way to separate the S&P 500 by sector. The number one performing sector, the blue line, 50% gains in energy so far this year. The energy infrastructure component of that. The financials are item 2, and the financial dividend companies doing very, very well with about a 26% gain so far this year. Healthcare has risen to number 3, and the medical dividend companies showing that benefit at about a 23% year-to-date gain on average. Commodities, you've heard the term inflation. Well, we're going to address inflation here in a second as well, but the commodities being the underlying component of inflation with a 20% increase in the commodity index so far this year. Looks like it peaked long about the end of May at 563. Supply lines, intelligence reports from the technology field with the chip shortage. Looks like a big part of that chip shortage and component shortage gets solved between here and Labor Day. So September, you could see some of those technology constraints actually getting solved around the country. What is this? Well, this year-to-date chart, we don't want to be here. This is a 20-year Treasury. This is an illustration of duration risk for long Treasury bonds. And you can see a minus 10% in the value of a Treasury bond that only yields 1.5. Well, that doesn't seem to make sense. That's a big part of the fixed income allocations in traditional advisor portfolios. This tells you and telegraphs that may not work for a while. This is only a 2% yield, Vanguard Total Bond Market. It's down 3% for the year with only a 2% yield. That part of the fixed income allocation, which makes up a huge component of advisor-driven portfolios, well, it is not working, and it has dangers as we come out of the 0% interest rates. By the way, the high yield sector is actually up in price year to date. You've got a lot of institutional money moving into high yield, and those gains have been really good in the global high yield market. This is the price of a house. Over the past year, the median price of a home has risen 24%. That is a huge housing boom. The intelligence report, now the median home price is over $350,000. Institutional buyers are coming in mass right now, buying up properties. The liquidity provided by information sources like Zillow, the advancement of the realtor industry to be able to do transactions remotely, well, that has provided huge liquidity. The institutional race into residential real estate started with Blackstone and a $7 or $8 billion partnership they did in 2010, bought up foreclosed properties, fixed them up, rented them out, and sold those baskets of homes. Other institutions copying that, and it's going to drive the peak of this housing market probably quickly. Healthcare sector, as I mentioned, gaining momentum here, especially in the past 2 weeks, and the medical dividends being an inflation-friendly focus for us. West Texas Intermediate crude, 47 at the beginning of the year, 74.25 now. That could be an oil super cycle and the energy supercycle, including natural gas, which has a seasonally strong price right now, $3.50 per million BTUs. That says the whole sector may enjoy another 2 to 3 years. This is the pipeline index, up 40% so far this year, with one of the most attractive dividend yields in the market at about 9%. So the pipeline's doing obviously well, and here you have the pipelines without many capital expenditures likely to raise distributions by the end of the year. Well, Bitcoin, 65,000 at the peak. That was right as the stimulus checks arrived, April 15th. Looks like some of the stimulus money went here. 10,000 cryptocurrencies reached a value of $2.5 trillion. In the crash this week, only 1.1 trillion. That's 1.4 trillion went somewhere. It's gone. Well, the people that piled in at the peak obviously regretting the cryptocurrency craze at this point. There are predictions it could go a lot lower, and where it goes from here, the problem is you don't get any cash flow, and we don't really know where it's going. This is just for fun. Plano-based Torchlight Energy Resources, they had actually filed a report that indicated that they're probably not going to make it, but the Robinhood Reddit bandits climbed on board. It went to 11 bucks. It's now back to 5. Torchlight, by the way, if you look at their history, they began as a pole dancing studio and then went into energy. So Torchlight, very interesting rise from 67 cents to 11, even though they filed a regulatory report that says they might not actually make it. I'm Spencer McGowan, your financial weatherman. Thank you for joining us for today's fast-paced tour of the global financial markets. Be sure to subscribe, share with your kids and friends that have asked, where do you get your good financial advice? We'll be back next week with the best of the financial markets and investment strategy discussion you just can't get anywhere else. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast, and that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.